What's up, premium members? Welcome to the next core content video. This is the trading model based on basic market structure. It can also be used for invisible market structure, but it's just what I'm trying to say is it's my most basic trading entry model, and we're going to go over exactly what it is. Um, so the market has been not really, like at least on the higher time frame, not playing by a lot of the basic rules. So we're going to refer to refer to like the past in this because we just need to find some examples that are gonna make sense. First of all, though, as always, two things. One, we're gonna start with diagrams, and two, if you have not yet seen the market structure video, the candlestick structure video, the advanced candlestick and market structure video, um, the non-structural highs and lows, or sorry, the low tap back, high tap back video, um, and the Mark II and all that, then you need to go watch those first because those will tell you structure. And then this is how this is the basic model for how to trade um, flips and order flow and stuff like that using structure. So order flow is I don't know if there's a objective definition to order flow as far as like a specific time frame goes, probably like the Renko or something. But in for all intents and purposes in this video and in my group, order flow is the just the current structure of the lower time frame um, of your setup, right? So if we're talking about this being a 1 minute swing, the 1 minute is in bullish structure, but on the 5 second, we could be in, sorry, tired. We could be in bearish order flow, right? Until we're not. And then when we're not, we expect that the trend will continue and make a new 1 minute swing just like this one before, right? So this whole thing was just the 1 minute, and then this part right here that gets all small and detailed is the 5 second. So that would mean the 5 second had bearish order flow to bring us down into the supply and demand zone. And then once the order flow shifted bullish, we would be looking for trade opportunities to the upside. So for instance, from a completely mechanical standpoint, right, from a completely mechanical standpoint, this is not meaning that every single time that I see a swing or a flip on the 1 minute that I'm taking 5 second flips inside of it. This is just an explanation for. This is an explanation for the mechanical execution model that fits inside of the narrative that you have put together using your discretion, your experience, and your expertise. Right, so let's say we're trending up, and this is the 1 minute, and we make a 1 minute, another 1 minute swing right here. Okay, and you mark out your swing using a box, and then I'm going to go ahead and switch to I'm going to go ahead and switch to the red real quick. So let's switch to red. The red will represent the 5 second time frame. So this entire time, the 1 minute has been bullish and it is remaining bullish. So on the 1 minute time frame, as long as we do not go close below this protected low, or make a new protected low and then go close below it, we are still bullish. So that means that the 5 second can do something like this, where it flips down. That would simply just look like the blue, the 1 minute making a pullback, right? If we were to go higher above that and close on the 1 minute, then this would be a new protected low on the 1 minute, and we would need to then look for closure underneath that for a 1 minute flip down. But in this case, that's not what happens. What happens is the assumption is that the 1 minute is bullish this entire time and it hasn't flipped bearish. So when the 5 second switches order flow and it comes back down in here, right? We are looking for at some point a flip, which would be a closure above the recent swing, the local swing right here on the 5 second. And that would indicate that order flow has shifted to bullish. And so we would try to mechanically, how you would execute upon this is to take a trade here in most instances like this. And for me, I like to target the 5 second mark too for my first TP. So if I have a flip right here, right? If I have a flip right here, then I like to target that tap back like that. Okay. And then I like to target the potential continuation for the 1 minute to swing and continue swinging higher, right? And so the mechanical entry is just simply it comes the 5 second while the 1 minute is bullish, the 5 second flips down, and then the 5 second flips up, and it implies that it is going to now be now that we're going to now be having bullish order flow, which that order flow will eventually cause us to make a swing here when price can travel all the way through and make a new 1 minute swing, right? So that's perspective. Does it have to be the 50% of the zone? No. Does it have to be in the zone? No. I have noticed that if you do come into the zone and then you get a flip up prior to going to the 50%, that it's lower probability from a mechanical standpoint. So, what I mean by that is if we're right here and get a flip up, this is lower probability than if we're right here and get a flip up. And it's also this is also lower probability than if we were, let's say, right here and got a flip up, because this would insinuate that we were just taking out some sort of non-structural low tap back right here and then continuing higher, and we don't even need to come into this zone. Just two little nuggets for you guys, either at the 50 or lower, or at least very close to it, or not in the zone at all. I don't really like those 30% ones unless there is like a very, very obvious SNDR right here where invisible market structure says, it's actually an additional swing. Like we've got a swing and then a flip down and then a flip up and then we continue out. I might look at that and see that as an opportunity for a 30%. That would make it higher probability again from a mechanical standpoint. But typically, when you're just straight up extended here, you're either wanting to sweep out non-structural lows and then continue higher, or come all the way into the discount of the zone or close to the discount of the zone before going up. So let's get into finding some real models that use this basic entry tactic from the mechanical perspective. But we are going to be, finding places that the trade actually makes sense rather than just taking the trade because this pattern appears. We're not just taking the trade because the pattern appears. We're going to go find examples and understand why we would take this pattern inside of that trade setup. Okay, I found a couple examples on the daily and the 2 hour. I think looking at it from the higher time frame is going to be more beneficial because you guys will kind of get to see the value that I pull from this model. Because I pull most of the value from this model from the higher time frame, telling me kind of the overall bias and narrative for the next week or a couple days or things like that, rather than trying to use it on the 5 second and the 1 minute all the time. Though I still do. I think if you're learning it and you're learning to execute with it, you need to start with the higher time frame first anyway. So let's just go ahead and start with the higher time frame first on this one because it's the basic model. And from there, you can learn how to explore using it on lower time frame examples. Okay. So right off rip, you can see that we have a structural flip down on the daily. So we have a high and a low and then a higher high, so a protected low. We closed below it, so between this protected low that got closed below and the protected high that caused the closure below it, we have a swing. You know structure already, so you knew that. I already went and marked out where the 2 hour flip is right here, and I'm going to go ahead and show that in both of these examples, but I want to mark out the structure first and show you where the swing happens so you can kind of get a feel for exactly what's going on in this. And in this instance, ironically, in reference to the next video that you haven't seen yet, we have the 60% tap as well, which means this is an even better trade to take, because if we can hop in on our short here with our stop loss above this and target lower, we have a nice risk to reward ratio. But if we're wrong and we get stopped out, we also have a great amount of upside from there as well to extend through this, because then it would be a daily fake flip zone, right? But that is for the next video. This is the basic model. Let's get rid of this 60. So right now we have the discount premium line marked out right here on this swing, and then yet again another swing on the daily, the discount premium line marked out as well, the 50% of the supply and demand zone. So let's go to the 2 hour now and get back on over here. Where is it? Over here. I like the bearish examples because I feel like I show a lot of bullish examples on stuff, so I wanted to take the opportunity to mark out the bearish ones instead, right? Um, so up in here we have we have the first daily swing. Okay, first daily swing is right here. Let's scoot this one out of the way for now. This is our first daily swing. Bearish daily flip. Sorry, not a swing, a bearish daily flip. Right? So once we touch the 50%, immediately we get this reaction, which I think a lot of people would get triggered to try to chase a trade on, because what if it, doesn't make structure, and what if it goes all the way down here? And well, luckily we have the ability to get in on those using a lower time frame, using fake flip zones and visible market structure and stuff. But for this model, we're looking at just the structural flips and the change of order flow. So if the daily is the time frame that we're developing or marking out our structure on, then the 2 hour in this instance would be our order flow, right? And even below that, the 15-minute would be the order flow of this as well. But right here, once we close below this protected low, is where we get a flip down. So we're going to go ahead and scoot this over. This is the daily flip down. Okay. This is the 50% of the daily flip down. All right, what we do is we come up and we make our high, our valid external high, because the 2 hour is currently trending up, our valid external high. Then we go up and we put in another high once we close below this candle, right? Let me use the better lines instead. Put another high once we close below this candle, but putting in that high, which at the highest point of the market prior to closing below this high candle would be here. So our high, we would just go ahead and cover this out, but we would be looking to see a closure below the most recent protected low, right? And if you were really, really short biased, you could technically pull this card and say, well, we did come close above this we closed above this after closing below it over here. And we technically closed a little bit higher here and then closed under it. I mean, there's a lot of wicking and stuff if you really want to consider, the high to be here instead of just covering out the high and then this being the low. You can. That just depends on your level of conviction there. There is a case to be made that we did a high, we did the low, we did a slightly higher closure, but I'm just going based on using what I know from my experience, which is that, prior to us closing below this, anything that wicks above, right, we're going to go ahead and cover out. So in my mind, we're covering this entire thing out as a flip down on the 2 hour. Once we flip down bearish, notice how, and this doesn't always happen, but it will happen a lot more times in the higher time frame than it does in the lower time frame. We do come up to the discount premium, the premium section, the 50% again right here. So you can decide on exactly how you are comfortable on your risk management profile with taking those trades. You can take the trades based off of the entry, based off of the confirmation with the closure below that low, or you can wait for the 15-minute, right? You can, in this instance, you can wait to come up, have the wait for the 50%. This is an example of what I said before, that if we aren't yet at the 50%, and we get a flip down, that oftentimes I find that to be fake. It's either it's more likely to succeed when it flips back down right here. It's more likely to succeed when it flips back down right here. I consider the space between here and here more like no man's land most of the time, unless there was a fake flip zone right here. But as you can see, there's not. Um, and so this right here is the daily. This is the daily flip down. We've come up into the premium and we've made a 2 hour flip down. So mechanically speaking, there are two mechanical entry methods for this. One is that if the 2 hour remains bullish perpetually until, or at least if it remains bullish or bearish, sorry, as long as it remains bearish, you can just take the 50% tap or wait for a 15-minute flip confirmation after the 15%. Or you can just decide, if you're a swing trader, you're really hands off, you don't really care that much about getting every single drop out of the market, you can put something on like that. And again, I said I like to target the Mark twos on the time frame that I'm looking for my entry on, so the order flow time frame, which would be the 2 hour in this instance, right? And so if I'm looking for the flip happens the flip happens either here or here. I'm not going to look into it right now because I really need to go to the 15-minute to analyze this anyways. But either way, this is the Mark II. This is the lowest point that we tap into the flip zone up. That continues us higher. So this would be a very, very good target. Not only is it a place where we could potentially see a reaction for price to turn around, but even more importantly, it's a draw on liquidity that serves as gravity to pull price back to that level, because there was, there's something left on the table here. There's sellers or buyers on the Mark II line typically. So yeah, I mean, that would be a good place to target. And then obviously our runners are targeting the continuation down through, typically trying to hold a couple stops or trying to hold a couple swings, or at the very least going to break even. If you had gone to break even on this trade, you would not have gotten stopped out there and you could have continued to hold even lower. I'm not sure how greedy you guys are, but if it got to 1,000 points for me, I would just take it. Um, and then let's go to the next example real quick. It's basically the same exact thing. Um, let's go to the 1 day, the daily. So we're going to delete this flip and just delete all this and forget about this example completely. Hopefully, obviously you can just pause it and go back and rewatch it. Again, you understand that this is a swing down. You understand that this is a swing down because we're in bearish market structure because of the closure below this low. We pull back, we go lower below that pullback with closure, making this a protected high, making this a structural bearish swing right here. Structural bearish swing. And now, once again, we're up at that 50%, okay? And it looks like we maybe even had something like an attempt at a flip down here on the 2 hour. We'll go ahead and take a look. Maybe it did, maybe it didn't. But as you can see, in no man's land, it didn't really work that well. So let's go to the 2 hour and analyze. I already marked out the flip down just so we could go quicker here. So why is that a flip down? Because our highest bodied bullish candle is right here. We go ahead and close underneath that, making our flip on the 15-minute likely, but it's a pullback nonetheless on the 2 hour. So we have a pullback down, and then we go and make a high up here. This high candle does not get closed below, so we're disregarding it. Candlestick structure, we're in bullish market structure on the 2 hour. We're just looking for an external high. We finally get one. Um, and we're just going to call our external high here, and then that external high turns into a protected high. So we go ahead and first we have the swing marked out. Secondly, we have our flip down marked out right here. Okay, so we have a flip down marked out, and as you can see, it goes up to the 50% right there. So if you wanted to, you can do one of two things in this instance. You can take your short there and target, did it flip up right here? Let's see. Hmm. Yeah, it kind of did. It did. I mean, it closed there, so it confirmed all that. This is, again, this is the Mark II in this instance right here, on the 2 hour. So this would be an easy place to target for starters. And then I would say that when the Mark II is that freaking close to the low, you're just, obviously targeting tiny bit lower through that low, and maybe even continuing beyond that if you're getting another daily swing down. You can potentially even look for the daily to finish a closer underneath this, which is a concept I'll talk about more in the next video as well. You could potentially even wait for that closure to get confirmed, which would be right here, which would be a nice 1.83 on that. Or again, like I said in the last one, the mechanical execution could be that you are watching the 2 hour. Notice how the 2 hour never flips back up. So what I mean by that is once we have our bullish or our bearish flip down, let's get rid of the swing. Once we have our bearish flip down on the 2 hour, it doesn't make a swing down. So it doesn't make a second swing down, right? It doesn't go low, high, low, and then flip up into the flip down, right? It doesn't do that. What it does is it just simply makes non-structural lows, or sorry, well, these are actually, this is a non-structural low, so that makes it even better because we don't go and make a low here anyways. So it's not like we would be anticipating this. This serves even better as a draw. So as long as the 2 hour is remaining bearish, right? It flipped down. As long as it doesn't swing down and then make a flip up, then again, the mechanical execution style that you could adopt in this instance could also be the 50% right there, which would increase your risk to reward ratio significantly up to almost a 5 right there on your main target, and who knows what on your runners. So let's talk about the narrative of these trades. Obviously, if we're going to the weekly time frame and looking at where this happens right here on the weekly time frame, this is a Mark II right there. So at the second visitation of the Mark II, we actually get a closure not until, is it the second visitation? It might, it's like this. So this is the established Mark II. So there is once we close below this, which is on this bar, then we put this high in, and this high is our initial Mark II that causes the run to continue down, right? And then this is our established Mark II, which is from the left, from further in the past, right? And we believe that when we get up here, we could see price, you know, flip down. So we would be looking and saying, okay, well, it makes sense why price flipped down on the daily, which the flip down on the daily was right here. Yes, was right here. And then the swing down on the daily was right here. So essentially, we have reasoning for why we would want to take shorts on a larger scale. And it's not rocket science to see that. And honestly, the second short is a little bit iffier, but the first short is really nice because right here we have a weekly flip up. See that? Right here we have a weekly flip up, low, high, lower low, break, and then look here, we have the tap back. So coming underneath this, right? That first short, one of the ways you could set that up on your higher time frame bias would be to let that flip occur, take that 50% tap, or just get in the entry and chase the price. It's fine either way. Depends on your risk, you know, your risk settings for your personal trading style, and targeting something like a weekly Mark II, which is going to be a very massive draw on liquidity. is a great opportunity right there in and of itself. The second one, maybe not as much narrative, but if you believe that there it needs to make a little bit of a deeper dig, if you believe it's not done yet in that instance, then boom, go ahead. That can influence your entire bias. So structure on the higher time frame bias is very, very important. Um, and using these kind of trading models to influence where you believe the price is going to go, and then also using these trading models for entries from the lower time frame for executions is valuable. So use them in both instances. But yeah, I mean, this is just, I told you guys I would give you an example that has narrative to it. This is narrative. Here's our Mark II on the weekly. Here is a flip down on the daily. Here is a continuation of that trend down that we believe makes sense. It's supposed to be there. There's a reason from the left that it is there, and it's now playing out in front of us. So we're going to go along with it. We're going to go along with it until it doesn't work anymore, right? Now let's look at this last daily swing. Let's look at this last daily swing right here. Daily swing. Okay, let's go to the 2 hour. 2G, what? What the hell is a 2G? And you will be hard pressed to find a 2 hour flip down. It's not here. This is the daily swing, right? And where is the 2 hour flip down? Nowhere. So the higher time frame is going to tell a lot less lies. But when it does tell lies, we know that that's typically because price is being parabolic in the other direction. So for instance, like right here on the 2 hour, we get a nice flip up on the 2 hour and then a flip right back down. That's making it a daily, right? And then on invisible market structure, that's making it a daily. Putting a daily closure above there completes the cycle of making our higher time frame Mark II draw, making our flip up, and continuing us to the all-time highs. So yeah, this structure, I like I said, I like to use it this basic model mostly for swing trades or for the overall idea of the swing trades and the narrative for where the market is going on a higher time frame. When the opportunity presents itself for me to make those reads, like right here where I said this is a nice 2 hour fake flip zone. This is a nice strong structural daily swing. I don't like this daily swing. I told you guys I didn't believe in this daily swing. It seems very finicky. I think it's going to get run through. I didn't think it was going to happen all in one day, but it did all get run through. And then the one that remained behind it that held is right here, down into the 200s, just like we wanted it to go to. And that's just because the structure was there, right? And inside of here, if this is a 2 hour fake flip zone, and maybe we can look at like the 1 hour or the 30 minute, we've got a 1 hour flip right here. This is also a 15-minute flip. There were great longs. In the next video, I talk about the long entry setup there. There's just so much that you can find inside there. But as far as the mechanical execution model, goes for basic market structure trading. Again, let me change this to the blue. We'll give it one more go on the diagram, and then I'll let you guys get out of here and get to the next video or rewatch this and study it, take some notes. We have the higher time frame, which is blue in this instance, making structural swings. We have the lower time frame, which is going to be red, making our our order flow. And when we come down into here and we flip up structurally on that lower time frame, that order flow time frame, then we would take our entries, target the Mark II of the lower time frame, the order flow time frames Mark II, and then beyond that for the swing to close on that higher time frame and continue. Make this red just to paint the picture again. You can call this the 2 hour, you can call this the 15-minute, right? And this would be your 15-minute Mark II that puts you down in here. This would be the continuation of the 2 hour trend to come successfully close above that. That's it. Very, very simple, 30 minutes. Like, if you become obsessed with trying to trade this mechanically, you're going to waste so much fucking time. It's not even funny. You have no idea how much time of your life you're going to waste. I know because I wasted a lot of time trying to do it. Just like you're gonna have to do it because you're gonna have to like figure it out for yourself. People told me, well, actually, no one told me. I knew that I shouldn't try to trade it mechanically, so my higher self told me, right? But I didn't listen, and I spent a long time trying to figure that out, uh, how to do it. And is there some sort of algorithm to tell me like which ones are going to work mechanically or not? No, there's not. Like, look at the 15-minute right here. Let's look at the 2 hour. The 2 hour is currently still bearish. Okay, so for a real-time example, here is the 2 hour flip down. Here is the 50% of it. We are already in no man's land now. We didn't retreat. We didn't continue down before getting into the zone. I would anticipate that we would need to at least come to here. We were going to need a 15-minute flip down, the 15-minute to do something like something like this, right? And that could be a trade opportunity for price to go down. Where would it go down to? We would be looking for that Mark II, and it looks like that Mark II, the established Mark II, is going to be literally all the way down here. So could it go down there? I don't know. If it goes down there, this is an hourly flip up right here and a 15-minute flip up right here. But at the same time, these are all non-structural on the 2 hour. So it's going to depend on what the market is telling us in the moment, right? I'm not going to be mechanically looking at this and saying, okay, there's a 15-minute, I'm shorting until we get all the way down to 300, 700 points, whatever it is, right? Maybe if the stars align for it, but if the stars don't align for it in every other way, I'm not going to be taking that from a mechanical perspective. No. Let me set this back to blue. So once again, as always, if you guys have any questions, please send it in the premium chat. We'll be happy to answer them with charts and examples, or you can send charts and examples and ask me if it fits the model, if it fits the idea. I'm always open to giving my opinion on current price as well and my bias to my premium members. You guys know that. So I'm always here for anything like that. Yeah, and if you watch this video to the end, then just message me pasta. Have a great day. Goodbye.